Everybody, we just had a few technical issues there, but we are here. I can see that some of you are asking in the chat, but Brian, we are here. So good morning and welcome. Today's session, I'm Michelle O'Reilly, Managing Director here at Alps, for those of you that don't know, and I'm joined today by Nick Copley, our Head of Claims. Today's session focuses on a topic that affects our commercial lines clients, so recovering losses after a commercial vehicle has been involved in a road traffic accident. Nick, why is this such an important discussion point right now?
Yeah, thanks, Mish. So claims have changed a lot over the last decade. We've got firmer processes, higher client expectations, more stringent evidence requirements, and there are several reasons why this could be. This includes increased repair costs, higher numbers of claims, we have more mature processes through increased amounts of precedent, the use of technology in assessing claims, and we have more specialist handlers now with narrower scopes of expertise. Courts expect data-backed, efficient, mitigation-focused claims, and this means that brokers have a big role to play in helping set clients up for success with their claims and managing their expectations, which is going to be a big focus of today.
Okay, thank you. And just to add before we start, that there is also a question and answer section for you to add any questions as we go along, which we'll answer at the end. So please add them as we go along, and we'll dive straight in. It's quite a heavy session, isn't it, Nick? So
yeah,
we're going to dive straight in with loss of income, which includes loss of use and loss of profit. So what is actually recoverable?
So if we start with the assumption that liability is not a concern, recoverability comes down to three issues. So we're looking at reasonableness, evidence, and connection to the incident, or as we say, causation. So damages for losing the ability to use a fee-earning vehicle in the form of compensation, reasonable hire, or provable loss of profit are, on the face of it, recoverable heads of claim if they are evidenced correctly.
Okay, so loss of use then, what is that and when can it be recovered?
Okay, so loss of use is compensation for being deprived of a vehicle you were entitled to use. So this can be recovered either as a reasonable hire charge or a daily rate where no hire is used. The key case for loss of use is West Midlands Travel versus Aviva. Mm-hmm. So it's a case from 2013. The claimant here was a company that operated a bus service where there was plenty of spare buses to keep the company operating as usual. The court essentially said that if a business can keep operating because it has spare vehicles in this way, it hasn't lost income or profit just because a vehicle's off the road.
Okay, so that seems unfair, that a company's sunk resources into having spare contingency to avoid incurring a loss, and then they can't recover anything.
Yeah, and thankfully the courts agree that it's unfair, and therefore compensation can be recovered in the form of loss of use, but only as the actual economic value of being deprived of the vehicle. So this would include depreciation and the capital tied up in that vehicle, and vehicle-specific fixed costs. So what you can't do is claim notional fleet overheads, which would include wages or assumed earnings. So the situation here is quite clear, is that compensation must reflect the real loss caused by that vehicle being unavailable, and nothing more.
Okay, so how does that work in practice?
Okay, so in practice, what we'll do is we'll look at the amount that the vehicle has depreciated over the time it was off the road, so not in use, and a sum to reflect the interest on the capital tied up in the vehicle. And then for the specific vehicle overheads, we'll look at these pro rata over the period it was off the road, and these could include your tax, so vehicle excise duty. You might have subscriptions for your dashcam systems or similar things. Or in the alternative, some companies will have vehicles on long-term leases, and usually we'd look at what that lease has cost over the period the vehicle was off the road.
Okay. And what practical steps can a client take to help with a loss of use case?
Right, so if you operate a fleet in this way, our recommendation would be having a fleet inventory with the values and purchase dates. This is extremely helpful and makes it far easier to be able to calculate the depreciation and the interest that we're going to claim on the invested capital. With the other losses, these are fairly straightforward to evidence in the form of invoices or receipts for your dashcam subscriptions or your tax.
Okay. And that covers situations where there's no loss. But what about where a company does lose money because the vehicle can't be used?
Right. So in these situations, in principle, loss of profit can be recovered, but only where it's proven, not assumed. So speculative earnings, inefficiencies, operational issues such as the time spent by a director dealing with the aftermath of an accident would not form part of what we would seek to recover. So to succeed, the claimant must evidence that the vehicle was generating revenue and that the accident caused an identifiable reduction in profit that could not reasonably have been avoided. A case is unlikely to succeed if advanced simply in the form of, well, we lost work because the vehicle was off the road, unless it's backed by things such as fleet utilization data, job records, and other financial documents. Another thing that everyone should be aware of is that you wouldn't recover loss of turnover. You don't recover gross loss of gross income. You recover the net profit that was actually lost to the extent that it was unavoidable.
Okay, so how can loss of profit be proved?
In practical terms, we would look at job sheets, profit and loss accounts, tax returns, fleet utilization records, invoices, contracts, evidence to show lost contracts, and these, we need to be aware that these will be scrutinized heavily. Non-disclosure due to fears about commercial sensitivity or simply because it's onerous to compile all these documents will not assist the case. There isn't a good substitute for full disclosure.
Okay, it sounds like these cases can be difficult to prove. What preparations can be made in advance of an accident?
My advice would be simply have a plan in place. So have already documented details of suitable hires for replacement vehicles with evidence to show that you've researched the cost against other competitors and that you can demonstrate that a reasonable approach has been considered. If possible, I would always advise trying to avoid incurring a loss of profit altogether.
Okay, and sticking with hire then, do you see any issues here?
Hire can cause issues. As I've said, having a plan in place is a good idea. One of the issues that we quite often see with hires is where we get informal hires. This could be, you've borrowed a vehicle from a business associate, a friend, or from a company within the same group. The issues that we see here is usually down to the documentation or lack thereof, such as hire agreements, in-out mileage records, insurance records, and invoices. So if you try and rectify that by creating documentation later on to plug these gaps, it's going to be scrutinized heavily and it can cause cases to fail. There has to be a genuine need for hire, and we would always recommend that it's sought from a genuine hire company.
Okay, and what about credit hire? Can that be used in these scenarios where a company doesn't want to incur the outlay upfront themselves?
Strictly speaking, yes. You might, in some situations, specialist vehicles, you might find it difficult to find a credit hire supplier that can provide these vehicles. Another issue is that is you have to demonstrate that you've mitigated, and it has to be commercially viable. Credit hire rates will usually exceed the basic hire rates, and so if you've got the capital there available to be able to fund hire, it may demonstrate that you've not effectively mitigated your claim if you're hiring at a rate more than you could have done.
Okay, and so what if a hire can't be sourced then? What if one isn't available?
So it just comes down to good record keeping. So make sure that you've got clear fleet utilization data so you know when your vehicles are being used, tracking of lost work. So if you've lost a contract, make sure that you're storing records of that. Have your accounts accessible. That's a big one, because you want to avoid having to pay an accountant to reproduce your accounts. The more straightforward it is to demonstrate a loss, the stronger the prospects of recovery. I would try and have in your plan contingencies for rearranging work. Using vehicles at different times, demonstrating that you've mitigated your losses where appropriate.
Okay. Have we had any cases where adjustments have had to be made to rearrange work schedules to avoid clients incurring a loss? And how are those claims pursued if the client's gone out of their way to reschedule work?
Yeah, so it's they've incurred inconvenience in doing this. I mean, we've had plenty of cases where companies have acted in this way, and it's usually viewed to be the reasonable thing to do. And in these instances, we've had a lot of success in being able to recover compensation for the loss of use of the vehicles. So compensation is available.
Okay. So there are potentially three remedies then: loss of use, loss of profit, or higher charges.
Yeah, and usually only one will be recovered. So a pitfall that we see is clients trying to claim, for example, higher charges and loss of profit for the same period of time. You don't usually get both for the same period of time, that is. So I've seen situations where we've had a company that's hired a vehicle that can replace some of the functions, but not restore full profitability. These can often be difficult to justify as being commercially viable, and it becomes tricky to recover both for the same period. You might have situations where you don't hire straight away and have an initial loss of profit and then hire. That's not what I'm talking about. I'm talking about hiring and still trying to claim the loss of profit at the same time.
Do you have any examples of cases like that we've dealt with?
Yeah, I do. Luckily, they're relatively infrequent, but a good example would be we had a crane operator. He was able to hire a crane, but it had a smaller load limit than the crane that was damaged in the accident. So some of the work was restored, but some of the larger jobs were lost. The issue arose because it wasn't possible to show that it was commercially viable without the larger tasks. And so it cost more to hire the crane than was actually saved. So I would encourage clients to be extremely careful when considering trying to mitigate in this way. Always try and find a suitable vehicle and be prepared to have to demonstrate that it makes financial sense. You're not going to recover the full cost of hire if it costs more than you're actually going to be making. So in this instance, we did recover the higher fees, but we weren't able to recover any additional loss of profit.
Okay, so then to conclude this section, where there is no spare capacity, spare vehicles, what is the key takeaway?
Key takeaway here is keep your losses to a minimum and ideally have a plan in place when you do have an accident. We always advise to act as if there will be no recoverable losses. So act as if the accident was your fault. What would you do? Always be prepared to disclose financial documents if you do have loss of profit. And another good piece of advice for customers is make the brokers aware of the accident as early as possible. And if you have any questions or doubts about what can be recovered, seek advice as early as possible.
Yeah, okay, thank you. So we're going to talk now about drivers' wages. So what about drivers' wages when a vehicle's off the road? Can the employer recover the wages of an employee who has nothing to do because there's no vehicle for them to use?
The answer is not as an explicit head of claim. Employees are a fixed overhead. Wages would have been paid regardless of the accident, and so there's no loss that's been caused by the accident. It's an ongoing business cost. What matters here is whether or not this accident has caused a loss of profit, not necessarily whether staff were idle. The cost of wages is built into your business expenditure, and so if you can recover loss of profit, this will remedy this.
Okay, so loss of profit, loss of use instead of drivers' wages. It's how you frame the claim.
Yeah, it's how you frame the claim, exactly. Yeah.
Okay. And then on the second point, what if the driver was injured in the accident and can't work?
Yeah, so this is different. So we have accidents and your drivers may be injured at the same time as your vehicle is being damaged. The difference between the vehicle and the driver is there's no ownership in an employee, unlike a vehicle, and so the wages are not recoverable in law. There are mechanisms you can use to rectify this, although this has to be done in advance. So you can insert a contractual clause that states that any pay advanced during a time off where it's caused by injury through someone else's negligence is repayable. This then preserves the employee's right to recover their loss of income, and then they can reimburse the employer from their damages. So, and this just doesn't only relate to when they're driving the company's vehicle. If they were driving their own personal vehicle, this situation could also occur.
Yeah. Yeah. Any situation, if they were involved in a trip and slip, it's nothing to do with the employment. If there was a recovery clause in the contract, then the employer can enforce that, and the employee is then obliged to recover the sum of money paid to them.
Yeah, so the way I'd look at it is effectively view it as if they're not getting paid sick pay, so they recover loss of income in the same way, and effectively any pay that's given to them in that period of time, look at it as if it's a loan that you're giving to your employee at that point.
Okay, so what information would be required to recover earnings in this way?
So the contract or staff handbook displaying the relevant clause is essential, and it needs to have already been in place. You shouldn't really be trying to rectify those documents afterwards. Pay slips, along with evidence of the time off work and that it was caused by the negligent act or omission. And we would, if we're dealing with an injury claim in this way, we would normally get permission to pay that directly to the employer on recovery as well, to avoid any issues between the employer and the employee. And what we've done is included an example clause similar to the one that we use in the slide here, although I would say that you should run it past an HR expert before adjusting any contracts or staff handbooks.
Okay, thanks, Nick, but that's a great tip. And takeaway, I think, for our brokers perhaps to consider with the commercial clients. So that brings us on then to setting expectations. So how do our brokers best set expectations early?
My advice here is to be open with them from the start. Let them know that only losses linked to the accident and that are recoverable in law are likely to be recovered, and that they must help to keep those losses to a minimum and not extend them. We quite frequently hear clients say to us, I'm not paying for anything that's not my fault. And then what sometimes happens against advice is that clients will incur ongoing losses without taking steps to stop the loss. This is nearly always going to create issues with recoverability.
Okay. So what advice can be given?
So just to advise them that evidence is going to be non-negotiable. We understand that keeping tight records, producing documentation, this can be onerous, but it's important to understand the burden of proof is on the person that's bringing the claim. It is a much easier situation for a defendant to convince a court that a case hasn't been proved because of lack of evidence than it is for the claimant to convince a court to order damages. And therefore that really emphasizes the importance of having as much evidence and as much good evidence as possible. Managing expectations here can avoid a problem later on. This is another thing. So whilst it can be tempting to try and appease a tricky client, someone who feels particularly aggrieved by having to invest time and effort into mitigating the effects.
It's not their fault.
Yeah, it's not my fault. Why should I be doing anything? Yeah, it's far better to set the landscape out early, have that conversation then, than have to have it later on and disappoint them as to why they're, for example, not going to recover a hefty hire bill that they've incurred.
Okay, so what should brokers encourage their clients to do before anything even happens?
Okay, so there's some things that you can that they can do which will make a big difference. So we've covered a lot of it, but I'll go over it. So first thing is evidence discipline. So good, strong records, utilization logs for fleets, maintenance records. On the liability side of it, telematics, making sure you know which drivers are using what vehicles, billing records, invoices, clear, accurate records should be maintained. It's far easier to put together a cogent case on good records than to try and retrospectively piece the whole thing together. Clear internal processes. So this is the business plan for
Mhm.
unscheduled maintenance or accidents. It might not be possible to rearrange work using other vehicles if you're a one-man band. However, having a pre-existing continuity plan for the accident and showing that that plan has been followed, it could be used as good evidence to show that the customer has acted reasonably. When asked, we'll usually advise, and we've mentioned this already, but if in doubt, consider what you would do if it was a fault accident. Follow those steps. Technology is another thing. So adopt technology. Separate issue. We will get onto liability a little bit, but dash cams, telematics, these help win cases. But most things, I would say expediency. A good way of getting the best recovery and making sure that you're not going to be out of pocket is acting fast to avoid business disruption. So this comes into the plan as well, but if it can be demonstrated that decisive steps were taken as soon as possible to avoid or minimize the financial impact, then it can help to reduce or eliminate any arguments you might have later on over the period of loss.
Okay, so to recap then, good record keeping, a good business continuity plan, think about what would happen in the event of an accident before it happens, technology adoption and speed.
Yeah, exactly.
Okay. And so you've mentioned as well this word mitigation a few times. So what is mitigation and how important is it?
So put simply, mitigation is keeping losses to a minimum. The courts expect businesses in these situations to behave reasonably, reallocate work, hire appropriately, avoid delays. There are some common mitigation pitfalls, which are hiring above the required spec. So you're not necessarily going to recover the full rate. Hiring where it's not necessary to hire. It's inconvenient for me to try and rearrange, so I'm just going to hire, or not shopping around for hire, so not getting the best rate. Another issue that we see is the vehicle being left off the road unnecessarily. This could be not having the vehicle repaired by either paying from your cash reserves, or utilizing your comprehensive cover, or not replacing written off vehicles in the same way. This should be done as soon as possible. Another one is not taking steps, which we've mentioned already, to reallocate vehicles where possibly and adjust work schedules. Yeah, we appreciate it can be inconvenient, but the court will not accept or unlikely to accept a claim for loss of profit, which could have been demonstrably avoided.
Okay. Do you have any case examples?
I do. We've had a client who's had an HGV vehicle. Initially, their own insurer suggested that the vehicle should be written off. The customer had already hired a replacement. And they were disputing the total loss valuation of the vehicle. In fact, they were saying the vehicle was repairable, and had made it quite clear from the off that they didn't have any intention of having this vehicle written off and were always going to replace it. The issue arose because they didn't take any steps to repair the vehicle, and continue to hire during the period that they were dealing with the dispute with their own insurer. Not only this, the vehicle had been recovered and put in storage, and they'd left it in paid storage despite the fact that they had room on their own premises to store the vehicle. The result was that we only recovered a small portion of the storage, so what the courts considered reasonable, after the vehicle had been recovered, before they had the opportunity to move it to their own premises, and only a fraction of the hire, and they were left thousands of pounds out of pocket.
Okay. That doesn't sound like a position that any of our brokers would want their customers in. What could have been done to avoid this?
In this instance, well, they not only did they have comprehensive cover, but they had plenty of liquid capital that they could have used to either repair or replace the vehicle straight away, and could have had the dispute ended, done, and then they could have dealt with the dispute over the valuation or the repair cost afterwards.
Okay. Thanks, Nick. So let's talk about evidence now. So what are the must-haves for evidence?
So I like to think of evidence in three layers, which flow how our case would operate. So the first one is always liability. So you're looking at statements, photos, dashcam footage. So gather as much contemporaneous evidence as possible, as early as possible. The thing we need to know and understand is that recollections can change, footage can be deleted accidentally, and if photos are not taken, it can create evidential gaps. So write down accounts of what happened as soon as possible, store your footage somewhere safe, and encourage your drivers to take as many images as possible from the accident scene, even if it seems obvious who's at fault. Always take as much detail as possible as well about the other party involved in the accident. So company names, registrations, images, and above all else, never forget to take the driver's name. We've had cases that simply can't progress or have failed because we haven't identified or been able to, the driver from the third party vehicle.
Yeah, okay.
Yeah.
So what about if our client's driver is an agency driver, or the driver has left the company?
So statements can be difficult to obtain from someone who doesn't work for the company. Drivers may be reluctant to get involved with cases. They don't want to get involved in the liability dispute. They don't want to attend court, and this can prevent cases from progressing altogether. And even in quantum disputes, if you need that evidence concerning any damaged items or any aspect of quantum, it can impact recovery and cause delays. So key here, get the evidence early. If we have a signed statement, we can still, in some cases, rely on it as hearsay evidence, or in some situations, even summon them to attend court, but only where we have the written evidence from them already.
And does that statement need to be in a certain format? Does it need to be compliant with the civil procedure rules?
Any statement, so you accident forms, for example, these can be used as evidence, but where there is no court compliant statement of truth, the court will place what they consider to be the appropriate weight on the statement. So that statement of truth states that the person that signed it understands that knowingly giving a false statement could result in being found in contempt of court, will place extra weight. And the other thing is that it would usually prevent us from being able to summon someone to court if we don't have a CPR compliant statement of truth. So if you've got any doubts about your driver and whether or not they're going to make themselves available later on, let's get those statements early.
Okay. Thanks, Nick. And then the other issue, I know we have sometimes, or probably the biggest issue that we have now, is actually there's not a liability dispute. The insurer just doesn't respond. What about those scenarios where the driver may have gone AWOL?
Yeah, I'm not going to mention the names of any insurers, but it's a really common issue here. Insurers, the perspective we have is that they invest a lot of money in servicing their customers, but we believe there's a reluctance to adequately fund third-party claims handling. So we have situations even where we expect liability to be accepted and not being able to obtain a driver statement, or having a driver state that they're going to be available to attend trial, in a lot of cases is likely to mean that we have to assess it as being too risky to litigate.
So really the advice then is whether or not you believe a case is going to be straightforward, invest some time early on gathering the proper statements, and that can prevent disappointment. Even if you think liability is going to be omitted, the first point at which you think you're going to be experiencing some road bumps, you'd be saying, well, okay, let's get our ducks in a row at this point. Okay. So what's your next stage of evidence?
Next stage, I would be looking at what I describe as the damaged items. So vehicle repairs, anything else that's been physically damaged in the accident. So evidence for this, you'd be looking at for the repairs, the repair invoices, engineers' reports. For damaged items, always get images of and try and find the original receipts for any damaged items and receipts for any replacement items. With the vehicle, a chronology of the actions taken to deal with the repairs or total loss. So you've demonstrated what steps you've taken. We call these loss of use dates a lot of the time. And whilst it's important to act quickly, any loss has to be evidenced. with the vehicle, going back to the vehicle, an insurer route is often the safest way to get a good recovery, as the estimates will have already been scrutinised by and authorised by the insurer that's dealing with it, and that can prevent arguments further down the line.
So what about larger companies like logistic companies and bus companies who might have their own in-house body shops and repair the vehicle themselves?
Yeah, so they'll want to use these for expedience mitigation, but the key here is clear documentation. So take the images, if appropriate, produce estimates, make sure you keep invoices for replacement parts, document the repair process in as much detail as you can.
And what about labour costs? Can they charge for their mechanics' labour costs?
Well, going back to when we discussed loss of use, this would be normally considered a notional cost of servicing the fleet. It's a business decision that's been made rather than a loss that's been caused by the accident. So whilst time has been put into repairing the vehicle, and I wouldn't discourage a company that operates in this way from including these labour costs on their schedule of loss. If an offer came in that didn't include those labour costs, so they've been discounted from the offer, we would probably be recommending that they accept the offer. If it goes to court, you're not likely to be awarded those costs.
Okay. And what about any other evidence that you might expect?
So this is what I would refer to as the sort of stage 3 evidential pieces of evidence. So other losses. So really you're looking at your loss of use, loss of profit, which we've gone into in some detail. So you get your job sheets, schedules, fleet utilization, tax returns, profit and loss accounts. Yeah, things like that.
Okay. So do you have any closing comments?
Yeah, so summarizing everything in these types of cases, so commercial vehicles, efficiency, expedience, good documentation wins claims. So encourage your customers to have an accident plan, and when they do have accidents, advise them to keep their losses to an absolute minimum, and wherever possible, avoid loss of profit altogether, either by operational adjustment or appropriate vehicle hire.
Okay. Great, thank you, Nick. We're going to move now to the questions. I think we've got a couple here in the chat. So the first one is about loss of use and depreciation. Which you mentioned at the start. So it says, is depreciation a fixed scale or measured in the same way as the client accounts? E.g., one firm might depreciate over 5 years, another 10. So depending on the reporting method.
It depends on the reporting method. So if you've got something, if you believe you've got a particularly high rate of depreciation on a particular vehicle, you can look at getting specialist evidence to show that. Generally speaking, we're looking at 8%, obviously pro rata over the period of loss, would be our default go-to there.
Okay, and another one here as well. Just to be clear, if a business has spare vehicles, is loss of profit effectively off the table?
No, I mean, it depends on the composition of the fleet. If you've got a fleet, but you've only got one vehicle that can perform a specific function, you might have spare vehicles, but they can't replace that one. And in those instances, if you're unable to find a suitable replacement, you might still be looking to recover a loss of profit.
Okay. Is there a rule of thumb on how long loss of use is usually recoverable for?
It's whatever is considered to be reasonable. So you would look at what's the shortest reasonable amount of time you would have been able to get yourself back into a position to use that vehicle or have that vehicle replaced. So you'd be looking to keep to an absolute minimum any avoidable delays. The courts will look at the periods of time between obtaining an estimate, having the vehicle booked in, having the vehicle repaired, and looking to reduce anything where they consider that you've taken too long on those steps. So the best way to demonstrate that you've acted reasonably is to document every process. So if it looks like there's a long time, repairs are taking a long time, contact the repairer. You know, our parts on back order. You know, if why can't we book it in yet? Is there a backlog? Have we made sure that there are no other repairers that might be able to book it in sooner? As long as you've documented everything and shown that you've taken reasonable steps to keep those losses to a minimum, then you're probably going to be okay.
Okay. And so we've got another question here as well. What is Alps's attitude to the fast issuing of proceedings against a third-party insurer who doesn't respond? Assuming all info and evidence has been gathered, third party has admitted liability. This is in view of some third-party insurers not taking calls and being very slow.
This is from David Hull. Yeah, so our position on this is that once we're able to fully quantify a claim, if we've got all our ducks in a row, we'll give insurers an opportunity to respond and put them on notice, and then not delay on litigation. We're not overly litigious, I would say, but on the other side of it, I don't think it's reasonable to be rewarding insurers for not responding. We can't have claims hanging around. We don't know how long that insurer is going to take to respond. So we wouldn't normally put them on notice until we're confident that we're in a position to be able to litigate. They'll have their notice, be that 2 weeks or 3 weeks. And then we will be immediately preparing the case for litigation.
Yeah. So one of the benefits of obviously of being an Alps broker is that as well as being the insurance product provider, we have the group law firm, Alps Legal Practice, which means that claims are handled by the law firm from start to finish. So that does include the litigation as well. So I would say that our issue rates are probably higher than perhaps than some others.
Another point to note on this is that we do keep we do share information with each other inside the business about which insurers are operating in certain ways. So it might be that one insurer, we know that they're unlikely to respond, and then we have a handler who has a piece of information that says actually they've just started answering the phone. So if we've got, for example, an excess recovery, a lot of the time it doesn't. It's just going to delay things by issuing if you know that just a simple phone call might resolve it there and then. So yeah, gathering information and storing information on insurers is important as well.
Yeah. Okay. And then just perhaps another couple, if you don't mind, Nick. Do seasonal businesses face additional problems proving loss of profit?
Yes and no. So it's not necessarily a problem, but a good example there would be camper vans. So we have we've dealt with some claims for companies that operate camper vans that are hired out to holidaymakers, and obviously they're going to be used a lot more in the summer than during the winter months. We've had situations where there's been damage at the start of the summer, and therefore your recent history isn't necessarily reflective of what the loss is going to be of that vehicle being off the road. So this really goes back to, as we've mentioned a lot, having good documentation. So what we would do is simply look at the turnover over perhaps a period of 12 months, or if we've got good records, 24 months, just to demonstrate those seasonal fluctuations and be able to make sure that we're recovering the right amount.
Yeah. Okay. I think that's all the questions that we've got today then. So thank you very much, Nick. And apologies again for the start of the webinar with our technical issues. But please keep an eye out for our next webinars, and please do get in touch if you have any other questions or specific client questions that you perhaps don't want to put in the Q&A. Please do let us know. Thank you.
Thank you.